A recession is not the same thing as a bear market or a market crash. Going into 2019, there's a lot of fear that we might be entering a recession. Likewise, there's a lot of fear currently that we're in a bear market. So how are these two things different? Well, let's look into it right now. So in this quick video, I'm going to actually show you the differences between a bear market and a recession. So if you appreciate that, make sure to hit that like button down below and let's try to aim for 75 likes on this video. So let's start here with the definition of a recession. What is a recession? So a recession actually refers to 2 consecutive quarters of negative GDP growth in an economy. But now you might be wondering, if we're in a strong economy right now, how does this happen? How do we get to negative GDP growth? Well, really what I'd say here is that it's kind of a domino effect. So typically in a strong economy, you have low unemployment, you have people spending a lot of money out there on consumer goods, and you have companies posting record profits and record revenues. However, when one of these pieces slip out of place, it kind of causes the others to also start to slip out of place. So the biggest thing is, if people stop spending as much money because, say, interest rates have gone up and they can't afford to spend as much money now on things that they want to, this will typically lead to companies getting affected as well. Remember, less money spent is less money that companies can report on their earnings report. And if this gets really bad to a point where the company is actually struggling now and they're not reporting as strong numbers as expected, they might have to start cutting production, they might have to start laying off people, and as a result, unemployment rate starts to rise as well. So in a nutshell, when you start seeing this happen in the economy, again for 2 consecutive quarters, that's typically when we're in a recession. Now on the flip side, what is a bear market? So a bear market is typically referred to in the stock market from where prices drop from their peak down to 20% or more. So that 20% drop is typically defined as a bear market. After this threshold of 20% is crossed, if we now go 21, 22% lower, 25% lower, investors will say we are in a bear market right now. And what this means really is that stock prices will start dropping and there's more selling pressure in the market than buying pressure. As a result, you can see days in the overall market where the market's down a couple of percent or even 5-6% or even more. And this is because volatility increases typically in a bear market. But it is very important to note that just because we are in a bear market, it does not mean that we're also in a recession. Bear markets typically last around 12 to 18 months. Sometimes in odd cases, it'll last around 24 months. So now, as you can see from this chart over here, not every single bear market has led us to a recession. In this time frame here, there's 8 official recessions, again 2 consecutive quarters of negative GDP growth. But before the 1960 recession, you can see here, there wasn't really a bear market. Now let's say we've had 7 recessions in this time period for our calculation here. Now, if we look at the number of bear markets we've had in this time period, there's been around 9. So that means 78% of the time, a bear market begins before we enter a recession. And although that's a very high figure, it's not a 100% rate. So just because we're in a bear market or entering a bear market right now, potentially, does not mean there's going to be a recession following this. Another very important thing to put in perspective here, just kind of as a side, is how long bull markets last compared to bear markets. You can see from the data here that the average bull market lasts around 9 years and the average bear market lasts only around 1.5 years. And the gains made in a bull market far exceed the losses incurred during a bear market. So just keep that in mind, and if we do enter a full-fledged bear market, it does not mean it's a bad thing, because that just means the stocks are on sale right now. But anyways, I don't want to steer off track here, but if you just want a quick 1-sentence response, what's the difference between a bear market and a recession? You could pretty much say that in a nutshell, a bear market is when the overall market drops 20% or more, and a recession is when we have 2 consecutive quarters of negative GDP growth in the economy. And now with that definition of a bear market, we may be in a bear market here with some of the indexes in the US, so make sure to stick around because I will be releasing a video on 3 strategies that you can employ during a bear market. So to make sure you don't miss that, hit that subscribe button down below and hit that bell notification as well, so you'll get notified as soon as I upload that. So hope you guys enjoyed that video. Hope you got some insight here as to the differences between a bear market and a recession. Remember, they're 2 different things. But either way, guys, don't forget to invest positively, and I'll see you in the next one. Peace.